It's Sunday. The market's closed and I'm looking at charts and I'm trying to really focus on what I need to do this week when day trading. And I wanted to make this video to talk about something that I'm focused on right now, the idea that stocks move in waves. But the problem is, okay, we have an idea. The stocks move in waves. They go up, they go down, basically like a wave does. But when do you enter? When do you exit a trade? And the more that you believe that stocks move like waves, the stronger your trading ability can be for entering and exiting trades based on a simple premise that stocks move in waves. We're going to take a look at a chart and talk more about what I'm focused on right here in this video, so make sure you guys stay tuned. What's going on, guys? Patrick here. Like I said, it's Sunday. I'm getting ready for the market open tomorrow morning. It's a beautiful sunny day here in Hawaii, but I'm forcing myself to look at some charts, to focus on what I can do better as a day trader, and to also get prepared for this upcoming week. How can I profit the best? How can I maximize my trades? How can I minimize my losers? So let's dive into some charts and talk about this idea. Like I said, that stocks move in waves. If you've been watching my videos for the last few years, you already have a pretty good understanding of how stocks move in waves. But if you haven't already, hit that subscribe button, the like button, all the buttons down below, and we're going to dive into it right here. All right, so right now, looking here at the 15-minute chart on the SPY, what's interesting is if you just look, just look at it. It's pretty much like a wave, right? It never just goes straight up. It never just goes straight down. You get these waves, and you can see, we're going to look at the bigger picture here, especially on the daily chart, pretty much the same idea, right? Like you get these waves, the waves. The daily chart normally has more of an overall trend, but in general, you still see that the market just never really goes straight up. It will end up pulling back for certain reasons, finding support, and then moving higher, creating that wave. And you can see, basically the more that we focus on this wave idea, the more we see how the market is moving in waves. Even though when it's going down, you can see the market is going down through this move here, but still, guess what? We've got the wave happening. This actually is like this. So we got more waves there. Zoom in on this baby like this. And let's look at Friday, for example. If you're trading the SPY on Friday, you can see pretty much right out of open that we had this overall downtrend. So you're thinking, okay, maybe there's a few times that you wanted to jump in long, thinking this might break up to the upside. The problem is, one thing that I focus on exactly right now with the Ripster EMA clouds is when I have all of this candlesticks, when I have all this pressure below that red EMA cloud right there, I know there's no reason for me to get long until we see some bullish momentum, and that's when we're going to get a move. We're going to get a change in the EMA cloud there. So the EMA cloud is red, pretty much for most of the day there. We finally get momentum change, and then you can see the EMA cloud changes to green. You kind of get an up and then a down there. Should I be entering this trying to buy the bounce? I can try to buy the bounce, get a small little gain. Let's say, like right here, I buy this little kind of double bottom. We get a 0.29% move up. The problem is if I focus on the trend, focus on the wave here, or I guess not the problem, but the answer to this, maximizing profits, again, is if I'm shorting off of this overall trend, you can see the downside potential is almost 1% here to the downside. So if I'm able to capitalize off the idea that stocks move in waves and force myself to remember this, number one, I can enter this trade knowing that we have an overall downtrend. I can enter, let's say I entered basically when we got stuck here multiple times at this 452 level, and then I ride this. The problem is, okay, we bounce off 451, it squeezes back up. But if you look here in terms of the wave, it doesn't break back really to the upside here, right? It's like this, and then moves all the way down there. But again, we're not breaking above the highs on these candles. You can see there's selling pressure there. So that's giving me a reason to hold on to the trade. Now, I'm not saying that you have to hold on to your entire position for the entire length of the trade. But in general, if I'm going to be really trying to maximize my profits here, I want to make sure that I'm playing into the trend and letting the trend do its thing. Now, obviously, when would I have exited this trade? I think it's pretty clear to see if you look at the chart when this big green candle came in and we pushed above that overall downtrend. That's kind of a reason, for me to start getting out. But also you can see the bottom of this wave starts kind of, getting more and more pressure. Or I guess you would say more and more support at this level, this 449 level, seeing that multiple times, having that support there at that 449. That's something to really focus on. Again, you know, you can see, like I said, that overall trend is now pushing up. It pulls back. When would I have exited? Let's say I would have entered this breakout here. When do I exit? Again, looking here at the chart, looking at the trend, what do we have? We have a little wave. And look at the top of that wave. It's pretty clear. You can see the top of that wave kind of cresting. So it's almost like it goes up and then starts to roll over. And then that's when I should expect the downside to come. Now, obviously, you know, there's going to be days where the market's going to kind of fake you out and you're going to get these moves and maybe it pulls back and then maybe it goes higher from there. But in general, when we're really kind of focused here that, you know, when we're entering and exiting, when should I be entering? If I'm going to be entering, I want to be entering at the bottom. So if the wave is basically like if the market's moving down, 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 we start to get a rounding there. We start to get a rounding. That's where I want to be entering when we're breaking through a trend. Not just because we're rounding like this here. See how this is a little bit of a round on the bottom of that candle? That's not a reversal. It's not to say like, okay, it's time for this to reverse, but more so like if I look at this, this is giving me an idea. Again, remember we talked about like this small move. So like you can see there's a little bit of a reversal here, starting to push it back up. Let's say I jump in and I get out when it doesn't break above. I made 0.35% there on that move higher. But again, if I wait for the top of this overall trend and I'd short here, I'm making 0.72% to the downside if I was able to sell with the bottom. So you can see the upside, the downside potential is much better when I'm entering following the trend. So number one, when trading the wave, you're trading the trend, right? The trend is so important for you guys to focus on, and for me to focus on. If I'm shorting something, I better be shorting something that's going down. If I'm buying something, I better buy something that's going up. All right. Let's talk about, like, you know, let's not even look at the SPY. Let's look at AMC as a stock that's pretty volatile and, you know, all over the place. Again, the same idea on Friday here on AMC. You can see a huge break to the downside. It breaks below this $25 level. I think that's pretty clear to see. That's where your entry's at. If you're going to get short, it breaks below 25 and then sells off. And you can see how it kind of creates this wave, and it really doesn't start to like turn up and start to make that move higher until it gets down here. Now, obviously, it did start to do a little bit of a curve here, but you can see, again, just go and then moving down. So, you know, let's say I'm trying to enter here off this bottom, and I enter and try to get a pop up. That's a 2.4% move higher, trying to get that little squeeze back up. But if I'm patient and I waited for that whole entire move to the downside, that's an 11% move to the downside there. So you can see, again, patience is key, right? That's one thing that I'm really focused on right now is patience is king, and where I'm entering based on the overall momentum, the overall chart. What is it telling me? Should I be shorting? Should I be buying? If a stock is breaking through support, it's below the EMAs, it's not showing any idea of bouncing, well, then I should be shorting, right? If you look here on Thursday on the same thing, you got these waves and the same idea. Look at that. Again, you know, we're focused on what? We're focused on basically the rounding areas for entering and exiting trades, right? Because if I'm entering down here at the bottom and it pushes up there, I can now see this is almost like a double top. And I think this is something that I have problems with sometimes, because what happens is, let's say I enter trade here at 23.45. Now, this is something that's frustrating because I enter down here at 23.45, and that's, you know, if it pushes all the way up here, that's about a 6% return. If I'm entering down here off of the bottom of this wave, you know, if I'm kind of on the bottom here on this rounding effect, and I think it's going to break back to the upside, if I'm entering there, where is my target on this? Well, my target, obviously, we know there's a lot of resistance in this area, but again, if we look here at the wave, whoop, look how that's starting to round and then drip back down. So that's one thing that I'm kind of like, when I'm looking at these charts, I'm looking at these candles, I'm like, okay, I see the market, you know, getting stuck at this level, there's a good chance this is going to roll off, especially when you get that big pushback up like that, and then that next candle getting stuck right where it basically closed at, and you have a little bit of wick there, again, you know, kind of a sell signal, but the focus, again, really is seeing this rounding effect. So I think it's really good to focus on that because it's giving me, number one, you know, a better idea of where I should be getting out, and then also a better idea of where I should be entering, and then maximizing my profits from that. You know, again, if I set here and kind of, again, just kind of bought the bottom of this trend. You know, we got that wave up, we got that wave down, we start to get another rounding, we got that double bottom. So we're buying here at 24, and if we ride this up to the next top of that wave, we can see about 26. So you got a 9% return higher if you're buying that rounding effect. But if we look here, let's look at this as a wave. Now, the thing about this, you might say, well, why wouldn't you get out here? But you can look, and it's not as prominent that this starts to round off. It's just not as, you know, up and down there. So I think it's obviously, you know, in the moment, it's a little different, hard to say, but especially getting that big bullish move and you get that push back up, the double bottom should be kind of an indicator like, hey, this might be a good time to buy, seeing there, or, you know, continue momentum higher from that. So the overall idea here is really having patience, understanding that the market's moving in those waves. And when the market moves in those waves, where do we want to be entering? We want to be entering at the either top of the wave for a short or at the bottom of the wave for a long, and look for how those waves are forming. If the market's kind of moving in a certain direction, are you getting that wave inside of that overall momentum to the point, you know, to higher or lower? And also different time frames. You know, the 15-minute time frame, the waves are going to be a little bit different to see. If you go to like a 5-minute time frame, you're going to see those waves a little bit different, a little bit, you know, a little bit more sporadic. And it'll be just, you know, obviously a little different to look at. But if we go here, you know, let's look at the 5-minute chart one more time. If you look at the 5-minute chart here, you can see that, you know, this thing sold off. It pushed back up. Again, you know, we have that wave to the upside here. So it's basically same idea, you know. We pushed back up, we rolled off, and then that kind of double bottom giving you an idea of where to be buying. So looking for those waves, baby, looking for those waves. So every time frame it's going to work on. Obviously, the smaller time frame is going to be a little bit more sporadic. On the bigger time frame, it's going to be a little bit cleaner. And that's one reason that I really like the 15-minute chart right now. I'm really focused on the 15-minute chart when I'm entering and exiting the trades and making sure that I'm not getting a fake out, making sure that maybe, you know, trading on the 1-minute chart, you're going to get fake out. Looking at a lot of fake outs, a lot of information that kind of just pops up and goes and things like that. So the wave, entering and exiting, the bottom. We're getting long on the bottom of the wave. We're getting short at the top of the wave, baby. Looking for that rounding effect. If you guys haven't already, do me one big favor, hit that like button, subscribe button, all the buttons down below. I will talk to you guys later on.